Strategic 401k to Gold IRA rollovers for $250,000 to $500,000 investors. Transitioning part of your 401k into a Gold IRA can be a smart way to diversify your retirement savings. With economic uncertainty and inflation risks, gold acts as a solid hedge. If you have $250,000 to $500,000 in retirement funds, a careful and strategic approach is necessary to ensure a smooth rollover and maximize returns. Understanding the 401k to Gold IRA rollover. A Gold IRA is a self-directed account that allows you to invest in physical gold and other precious metals. By rolling over your 401k into a Gold IRA, you maintain the tax-deferred status of your savings while diversifying into gold. This transfer must be done correctly to avoid penalties or taxes. Get free Gold IRA guide and learn about how to secure your retirement with gold investment. Click the link below in the description to get it. Why consider a Gold IRA for $250,000 to $500,000 investments? 1. Diversification. Investing in gold helps reduce reliance on traditional stocks and bonds, which can be volatile. 2. Inflation protection. Gold preserves purchasing power over time, providing a hedge against inflation. 3. Stability. Gold tends to perform well during market downturns, offering a safe haven during economic instability. 4. Tax benefits. Rolling over your 401k into a Gold IRA keeps your savings tax deferred. Key strategies for a successful rollover. 1. Choose a reputable custodian. Select an IRS-approved custodian who is experienced in handling Gold IRAs and offers transparent fees and services. 2. Diversify your gold investments. Include different forms of gold, bullion, coins, and bars. You can also invest in other precious metals like silver and platinum. 3. Understand IRS regulations. Make sure your gold meets IRS purity standards, 99.5% for bars and coins, to avoid compliance issues. 4. Select storage options. Gold must be stored in an IRS-approved depository. Choose between segregated or commingled storage based on your preferences. 5. Consult financial advisors. Get professional advice to determine the right portion of your 401k to allocate to a Gold IRA. Optimal allocation for $250,000 to $500,000. 1. Balanced allocation. Allocate 20 to 30% of your portfolio to gold and the rest to diversified assets like stocks and bonds. 2. Risk-averse allocation. For more protection, consider allocating up to 40% to gold, especially in uncertain economic times. 3. Dynamic allocation. Adjust your gold allocation based on market conditions, increasing it during inflation or downturns and reducing it during growth periods. Benefits and risks. 1. Benefits. Preserves wealth with stable value. Tax-deferred growth. Reduced portfolio volatility. 2. Risks. Short-term gold price fluctuations. Custodial and storage fees. Lower liquidity compared to other assets. Steps to execute the rollover. 1. Open a self-directed IRA. Set up your Gold IRA with your custodian. 2. Initiate the rollover. Request a direct transfer from your 401k administrator. 3. Fund the account. Transfer the amount you want to invest into the Gold IRA. 4. Buy gold. Work with your custodian to select IRS-approved gold. Rolling over $250,000 to $500,000 into a Gold IRA can enhance the stability and security of your retirement savings. By following these strategies, you can protect your funds from inflation, diversify your portfolio, and ensure long-term financial growth. Free Gold IRA Guide. Learn about how to secure your retirement with gold investment. Download your free Gold IRA Guide now. Click the link below in the description to get it. Thanks for watching. Please like, share and subscribe.